U.S. stocks rose, sending the Standard & Poor's 500 index higher for a second straight day, as American voters went to the polls to pick the president. Hewlett-Packard Co., HP and United Technologies Corporation, UDX added at least 2.8% to pace gains among the biggest companies. Computer Sciences Corporation, the manager of networks for NASA, surged 18% as a cost-cutting program helped boost its profit forecast. Express Scripts Holding Company, the largest U.S. pharmacy benefits manager, plunged 13% after saying analyst profit estimates for 2013 were overly aggressive. The S&P 500 SPX rose 0.9% to 1,430.05 at 1:11 p.m. New York time. The Dow Jones Industrial Average added 152.43 points, or 1.2%, to 13,264.87. Trading in S&P 500 companies was 2.6% below the 30-day average at this time of day. "We're moving closer to a definition on the election front," said Mark Lucchini, who helps manage $54 billion as chief investment strategist for Philadelphia-based Janney Montgomery Scott LLC. "It's offering investors reason to say, we move from the unknown category regardless of the outcome." U.S. voters decide today between giving President Barack Obama another 4 years in office or replacing him with Republican challenger Mitt Romney. The next president will need to address the so-called fiscal cliff of more than $600 billion in tax increases and spending cuts that take effect in 2013 unless Congress can reach the budget compromise. The S&P 500 has surged 14% this year as central banks stepped up stimulus to boost the economy. About 71% of companies that released quarterly results have beaten estimates, according to data compiled by Bloomberg. Options market. The options market is implying about a 2% move up or down in the S&P 500 over the next 4 trading days, according to Susquehanna Financial Group LLP's head of derivatives strategy Trevor Model. That's equivalent to an even odd range of 1,389 to 1,445 for the close on November 9 based on options prices as of yesterday, he wrote today in a note to clients. 9 out of 10 groups in the S&P 500 rose today as commodity, industrial and financial shares had the biggest gains. The Morgan Stanley Cyclical Index of companies most dependent on economic growth increased 1.8% to the highest level since March. Hewlett-Packard rallied 2.8% to $14.40. United Technologies added 2.9% to $80.12. Computer Sciences CSC jumped 18% to $37.07. The company has cut jobs and worked to better manage its contracts, helping boost cash flow. Computer Sciences said today that it continues to reshuffle operations. That includes divesting non-core assets such as a smaller business in Italy, the company said. Analyst recommendations. Chipotle Mexican Grill Incorporated, CMG added 5.7% to $280.30. The burrito chain, criticized by hedge fund manager David Einhorn, was raised to buy from neutral at Bank of America Corporation. Lam Research Corporation, LRCX, gained 2.9% to $37.91. The chip equipment company was raised to positive from neutral at Susquehanna Financial Group by equity analyst Mehdi Hosseini. The 12-month share price estimate is $48. GeoG Resources Incorporated, GeoG climbed 4.6% to $122.17. The largest oil producer in Texas, Eagle Ford Shale, reported profit that exceeded analysts' estimates and boosted its output forecast. Express Scripts SRX plunged 13% to $55.01. A weak business climate and the unemployment outlook may lead to a loss of members, depressed drug utilization and increased client demands and expectations, Express Scripts said in a statement. Profits for pharmacy benefits managers are tied to clients' drug costs as they act as middlemen between employers, health plans and the drug industry. Quarterly loss by Dues Incorporated, VDU, slumped 23% to $11.53. The maker of the recently approved obesity drug Qsymia reported a larger third-quarter loss than analysts expected. The company told investors today that some patients are abandoning prescriptions at the pharmacy on discovering they must pay a large portion of the cost out of pocket. Andrew Behrens, senior healthcare analyst with Bloomberg Industries, said in a telephone interview. DirecTV declined 1.4% to $49.94. The largest U.S. satellite television provider reported third-quarter profit that trailed estimates after Latin American subscriber additions failed to meet analysts' projections. Fossil Incorporated. FOSL tumbled 12% to $83.23. The maker of the namesake watch brand reported sales that trailed analysts' estimates. THQ Incorporated. THQI dropped 47% to $1.60. The money-losing video game company posted a loss and announced it hired Centerview Partners LLC to evaluate its options and raise cash. Zillow Incorporated. Z retreated 19% to $27.81. The operator of the largest real estate information website posted the record decline after forecasting fourth-quarter revenue that trailed analysts' estimates. Healthcare. The cost of healthcare options jumped to a two-year high versus the rest of the U.S. equity market, pushed up by bets that a victory for Romney would endanger President Obama's industry overhaul. Implied volatility. The gauge of option prices, for contacts closest to the healthcare select sector SPDR fund jumped 23% since hitting a low on September 21 to 14.37 yesterday, according to three-month data compiled by Bloomberg. The measure reached its highest level since May 2010 relative to the SPDR S&P 500 ETF Trust 2 weeks ago. The U.S. exchange-traded fund, tracking companies such as Aetna Incorporated, Itatus and WellPoint Incorporated, has climbed 16% this year. Issuing waivers. Romney has said he has the option of issuing waivers to states, allowing them to get out of the Affordable Care Act's requirements. The law, championed by Obama, is designed to expand insurance coverage to at least 30 million people. The repeal effort would confront hospitals and insurers that have already begun preparing for changes in the healthcare system that mostly kicked in by 2014. The healthcare ETF will go up if Romney wins because the market considers him better for the sector, Lev Untley, a fund manager focused on the healthcare industry at New York-based PolarWatch, said yesterday in a phone interview. If Obama wins, it's going to be status quo. The Affordable Care Act marks the biggest change to the U.S. health system since Medicare and Medicaid were established in 1965. Romney said in June that he disagreed with the Supreme Court's decision to uphold the constitutionality of the plan and that what the justices failed to do he would do on my first day if elected President of the United States.